Good afternoon. We're about to start what I think will be the most exciting session of the whole two-day conference. So let me start out by introducing myself. My name is Medina Negatu. I'm going to be the moderator of this session, this plenary session called the Business Circle. Essentially what it means is we have a lot of high-powered people on the panel who will share with us their view, their vision, and their insights into doing business in Africa, trading, and also in terms of promoting Africa. I had the great fortune 2 years ago of chairing this plenary session, but you never get used to it when you see thousands of people sitting in front of you. So I want to thank, actually, before I get started, the Dubai Chamber for having invited me again to be here, to speak, to chair. They have done a fantastic job, as you can see. I've been working with them, collaborating with them for the last 3 years, and every time I interact with them, I'm amazed. But then again, why are we surprised? This is Dubai, right? Very vibrant city. Every time you come here, I don't know how many times I've come here, I'm always impressed. But I would say something that illustrates Dubai's ascendancy to power. I don't know how many of you have watched the latest installment of Mission Impossible with Tom Cruise. It was released about 18 months ago. And you know where it was filmed? Right here in Dubai. And you saw Tom Cruise dangling from the tallest building in the world, who the gentleman was sitting earlier built. That, I think, to me, was a reflection of what happens when you execute on a vision. And a lot has been said about the leadership in Dubai, but one of the things I remember at the Harvard Business School, we had a case study about leadership, the Global Leadership Program. One of the examples, one of the case studies is Dubai. This is what they use to teach future leaders, global leaders. So I think it's no surprise that we're here in this wonderful, fantastic city called Dubai. I've said this in the past, and I'll say it again. If you want to be in the global business these days, in emerging markets, and you want to be taken seriously, there are three things. You have to be in Shanghai, Mumbai, Dubai, or goodbye. So that's, I think, to me, a reflection of why we're here. I don't want to take up too much time, but as I said, this is a session of very talented, very successful people who I'm sure will wow us with their expertise. But let me start out with one simple premise, which is, why are we here today? Why are we talking about Africa? Why Dubai and Africa, right? One of the reasons we're here, and it's getting a lot easier, but it wasn't always like this until a few years ago, is it's Africa's time. We actually, in my firm, we call it It's Time for Africa. Every year we put out a report called It's Time for Africa. And we try to link it to the global changes that we see, and we'll come link it to the question I'm about to ask my first panelist, which is, today, in 2010, Africa contributed only 4% to global GDP. By 2050, the expectation is Africa will account for 12% of global GDP. That shift of economic power from west to east is starting to happen. So that's why we get a lot of these days, lots of conferences about Africa, unlike any time in the past. It's because it's time for Africa. But here's the challenge, though. What is the reality of doing business versus the perception? So to answer this and many other questions, we have, as I said, a very distinguished panelist. To my left, and we decided to discard with protocol, so nobody on this panel is going to be referred to as His Excellency. So everybody is on a first-name basis. To my left is Sindiso Nguyen, who is the COMESA Secretary General. I don't think he needs any introduction, but I just thought I'll do that. Next to him is my good friend, Jean-Louis Ekra, who is the CEO of Africa Exim Bank, who was kind enough to invite me last year to speak at his annual general meeting in Beijing. Next to Jean-Louis is Justin Chinyanta, who heads a very successful investment bank called Loita Group out of South Africa. And then the gentleman next to him is Charles Imbiri, who is the chairman of MTN Uganda. He's not just the chairman. I found out from my early discussion with him, he's one of the shareholders of MTN, which is one of the most successful, if not the most successful telecom operator in Africa. But last but not least, we have Patricia Francis, who's the executive director of the International Trade Center from Switzerland. So this is the panel, right? You would agree with me, there's a lot of bandwidth represented here. So let me start out with Sendiso and ask him, from your perspective, you deal with COMESA, which is the largest trading bloc in Africa. What is the perception versus the reality of doing business and trading in Africa?
Well, thank you very much. Your question is very interesting in that you are saying what is the perception versus the reality. Right. The question is rather to be posed the other way around, whose perception versus the reality. Right. Because if you talk about the perception of those who have not been to Africa, they will rely on the sound bits, that sound bites, that is, that they see on the digital, media. But if you talk to those, like we had one of the investors talking here, they will tell you that, it's a totally different, issue. So at the level of the regional economic communities, what I would say to you is that COMESA and the other regional economic communities have really done quite a lot to contribute towards, investors seeing, Africa as an important market. And in this regard, I just want to start by giving you the following, to say that you have basically 4 types of investors. You have investors that are natural resource seeking. And for those investors, they will go in, because if they are first in, then they'll reap the rich pickings. Then you have got market-seeking investors, and this is what is important to us as a regional economic community, is that when you create one large market with harmonized macroeconomic policies, monetary policies, rules and regulations, including for investments, then you have created the conditions which will make people not deal with the perception, but deal with the reality in terms of the regulatory environment that exists. Right. Then you have the other investors, which we are not looking for, who are technology, seeking. And then you have the efficiency-seeking investors, efficiency-seeking investors, and those that will be looking at the markets. I can cluster them together for the very simple reason that the two go together. Right. So if you then look at the regional economic communities as a preface to my remarks, that COMESA with 495 million people, with a GDP of 525 billion, and you create an FTA, you harmonize the regulations, and you also, as COMESA, have established what we call a common investment area that is being harmonized, that is being implemented, which also deals with issues of double taxation agreements and things like that. So you will find that, therefore, you're not dealing with perception, but with reality of what is being done in order to create that enabling environment for the investors that are market-seeking, that are efficiency seeking. So if you had to ask me what is the perception today of the COMESA region, of the tripartite region that is COMESA, EAC, and SADC, which is also in the making. We have negotiations taking place right now in Kigali on the tripartite, that's COMESA, SADC, and East African Community Free Trade Area, with a population of 565 million people, a GDP of $1.2 trillion. This is what I would say investors are looking for. Right. Because once you have that market and you can deal with the issues of reducing the cost of doing business, then you are on the right track. Right. And hence, with the issue that is always perceived as biggest constraint for competitiveness for our region by the private sector, which is the fact that if you are moving, for example, a 20-foot container, let's say from Japan to the port of Mombasa, you do it at $1,200. But when you move it from Mombasa to Kampala at $3,700, then you begin then to have that. I don't think that's a perception.
Right.
That's a reality. And what we have got to do, and what we are doing, is then to deal with identifying what is it that causes that to happen. Obviously, you have the infrastructure issues, but I can tell you one thing, that 60% of that cost is not due to infrastructure. It is due to the regulatory requirements, and hence, we are harmonizing the regulatory requirements. And our target is, why don't we reduce it to $2,000? You know, once we do that, then you'll begin to see the efficiency that we are talking about.
Right.
So, but in order to do that, you cannot do it using the traditional means of how we have approached these NTBs.
Right.
I hold the view, and we are implementing these programs, that you must be able to disrupt it. Because if you don't disrupt existing systems, what will happen is that they will get entrenched and it becomes very difficult to change them.
Right.
And thanks to information communication technology, we can simply disrupt it. Right. I can tell you that if I have a container sitting in Addis Ababa coming from Japan, I'll be able to monitor it when it leaves the port in Japan up to the port of Djibouti. But once it reaches the port of Djibouti, between Djibouti and Addis Ababa, I will not be able to tell, you know, where it is. And yet, if you are able to tell where it is, you will be able to introduce transparency, but you must also integrate all the documentation, the sanitary and phytosanitary standard documents, etc., into one, you know, regime.
Right.
Some people call it the single window, but this I can call it a regional, you know, single window. Any change that has happened from my own experience has happened when you have been able to disrupt the existing system by introducing something that will sweep away the resistance. Because, as was said earlier on, human beings will always resist change. And thanks, I think, to ICT, we have seen what happened to the fixed line operators. When the mobile phone came in, they were telling me, we are not going to invest there because this is not our business. And they lost the market. So this is what we are doing.
Very good. Well, thank you very much. I think that gives me a lead into the banker, Jean-Louis. I know you've been ramping up your activities across Africa. I mean, last time we met in Beijing last year, you also had a long line of Chinese bankers wanting to partner with you and all that. How do you see the perception, and especially from your bank's perspective? You go on trade finance and like, do you see it changing? And also at the same time, does the reality match the sort of, as was said by the speaker earlier, is it matching or is it a gap? Do we still see a big gap?
No, clearly the reality is that perception is changing. That's the reality. When you see the diversification of partnership in trade of Africa, China has overcome America now as the single largest trader with Africa. The other thing is, when you get into any African airport, you see the crowd of foreigners coming. I was attending a conference recently in Dublin, and I was asked, an aviation conference, I was asked to talk about Africa. And I said that the best people to talk about Africa should be Emirates and Turkish Airlines. Someone should ask himself, why would Emirates have a daily flight in most of the cities of Africa? It is essentially because there is demand, and essentially because most people are now interested in Africa. The reality is also that Africa went through what some European countries don't want to go through right now. That is structural adjustment process. For more than 20 years, most African countries did adjust the way of life. for more than 20 years, the regulatory environment in most African countries has drastically improved. So what we are seeing now is not only the result of steady prices of commodities, as most people seem to infer, but it is also the result of a deliberate effort to improve governance, a deliberate effort to improve the regulatory environment so that you can attract investors. So the diversification of partners for Africa, we believe it's a very good thing. Right. It's also a very good thing for the world at large, because that the old system whereby Africa was largely trading only with Europe and America, we've seen when there are downturns in Europe and America, we get affected. But this time, with the downturn that we see in Europe and America, Africa is less affected than it would have been. And we see a lot of interest from our perspective, from international banks coming to partner with Afrexim Bank, essentially because we are a multilateral institution and dealing with more than 34 African countries. So they see us as a point of entry to reach out to many countries. So in a nutshell, what I can say is that really perception is changing.
Right. Very good. It seems like we're aligned already, so I'm going to come to Justin now. Justin is, as I said earlier, is an investment banker based in South Africa, but doing business across Africa in many countries. And I know earlier in our discussion you said you actually provide debt financing, mezzanine and other types. So is it getting a little easier to do those kinds of deals now in Africa? I mean, because of this perception thing, I know there's a ton of money, at least in the M&A business that I do, the private equity business that I do, there's a ton of money coming into Africa, for sure. So the perception is obviously starting to change. Are you seeing that in the everyday work that you do, the deals that you do?
Okay. Thank you very much, Zeman. Clearly, over the last 15 to 20 years, and I've been involved in the investment banking world in Africa only for the last 25 to 30. So we have seen incredible changes. And those incredible changes, principally, if you take, I always see it from a two-phase perspective. The first phase was when the Berlin Wall fell in 1990. And suddenly people realized that there was only one option, and it was knowledge of the international capital markets and how they worked, which would actually, bring them success or failure. So what you found is, prior to then, you still had people who believed in central command economies in most of the countries that we were dealing in. Right. Now, from 1990 to probably about, 2008 through to the crisis, you really found a very aggressive spirit towards privatization, towards people beginning to say to themselves, how do we become success stories? How do we get ourselves marketed better to the market? And I think we heard earlier, success is contagious in its own sense. Right. So what we have then found as a consequence is that people like us who position ourselves as investment bankers always made our money from basically mining the gap between the perception and the reality. Now what's happening is that there's a convergence that's happening, and that convergence, obviously, as you know, is a risk-return issue. The higher the risk perception, the higher the return. Right. Now, as people begin to start looking at the market and realizing that Africa is probably the last growth market, we're beginning to clearly see a situation where even the price of debt paper is basically thinning out. I mean, interestingly, I'm from Zambia originally. We issued a sovereign bond last year. And as you know, it set a benchmark for virtually the lowest cost, bond that had been, floated. Last week, our friends from Rwanda issued a bond for 400 million, it was basically 8 times oversubscribed. I'm proud of that record of Rwanda because, you know, as Governor Kanyumba then, who is now the Minister of Trade, will attest, in 1998, when our group went to Rwanda, people only saw risk in Rwanda. Right. And, you know, we helped turn that perception by actually practicalizing one of the financial institutions in Rwanda, which the central bank had given us to look at. And now it's a success story. You're beginning to see the results of that.
I completely agree with you. The Rwanda story is actually very inspiring. As you said, the subscription was half the GDP of Rwanda, actually. Even though it was only 400 million, it was subscribed to about $4 or $5 billion. So it's a very good story, which, as you said, is we see the gap kind of starting to narrow. By the way, in the private equity business, we're not giving away any trade secrets here. The average return for PE funds that have been doing business in Africa is the highest of anything you will find anywhere in the world. So, I mean, of course, that's going to start coming down as more and more money is money. But let me move on to MTN. Okay, for those of you who are not familiar with MTN, it's the largest telecom operator in Africa, right? Is that a fair statement? And you are the chairman of MTN Uganda. I know you started out as an entrepreneur and all that. So from your perspective as a telco, which actually, as Sindiso said, technology is actually leading Africa, and telecom, mobile phone in particular, has had a huge transformational impact. Do you see that at least the perception in the sector, I know it's becoming more saturated now investing in telecoms, but do you start seeing that the risks, people's perception of doing business in Africa is starting to align with some of the realities without discounting the challenges from your perspective?
Yeah, I think the perception is changing. When we came in, we knew that, for example, when MTN was coming into Africa, we discussed it, and from the statistics available then, which were wrong, we were supposed to get 15,000 subscribers in the first year in Uganda. We got 7,000 subscribers on the first day in Uganda.
Wow.
So I think that perception has been created from the school of thought I come from, people who want to create a layer. We rely more on political media rather than business media. So that is where the perception comes in. Their realities and the way people create the business plans are imported business models, not homemade grown business models for Uganda or for Africa. And that's where the perception problem comes in. But the realism on the ground currently is that there's a vibrant, young generation. Their demand, their basket of goods has changed. Their tastes have changed. The statistics available right now are more realistic than before, because today, from mobile telephony, I can easily tell you which area has had a harvest, which area is growing food, which area the business velocity has accelerated. So in reality, there are tools right now that can help any investor coming into Africa make better decisions.
Exactly.
And the perception changes thereafter.
So what you're saying is technology actually has enabled investors to get what I call better price discovery.
Technology is now a very good enabler for business. We now have Twitter presidents, you know that very well. We have Twitter heads of state. So they know what is happening on the ground, they can follow up, and they don't believe in doctored information coming to them. So that the decisions they're taking are more realistic, and they are more activated because of the actual information they get on the spot right away.
And that helps narrow the gap between the perception and the reality.
Yes.
All right, moving on to Patricia. I think you're the only one who lived outside of the continent, right?
Yes.
But you obviously have a good handle on what's going on in the continent. So From your perspective, from your organization perspective, I know you're a very experienced person in Africa. How do you see that changing? As the other four gentlemen said, you're the only lady on the panel. The other gentlemen seem to be in alignment with, in terms of the perception gap is starting to get narrower. Do you see that in the work that you do, in the interactions that you have?
Well, let's start from perception surveys, the World Bank Perception Survey, which looks at doing business, which is, I think, a good base to look at. And I think what you see in the COMERSA countries is a ranking from 19 to 134 out of 185 countries. So you see that there is a variety of experiences that are being experienced by investors who fill in these perception surveys. Now, what is the reality compared to what the perception is? And I think that it's been said right here. And I think it's been said on other panels as well, because your perception of risk, your perception of the ability to do business relates to how much information you have to be able to make your decisions. And in the absence of good information, you always err on the side of caution when you're doing business. And I think that is probably one of the biggest challenges that Africa is facing at this point in time, is having good data, good information, building the awareness of what the reality is. And this is something that I think the SG is very aware of and has been facing this challenge right on, whether it is an issue related to experience that investors are facing in terms of their ease of doing business, trying to cross borders, et cetera, because we all have this picture of trucks lined up on the borders, the time it takes to cross over a border, the fact that it seems as if there are so many bureaucratic processes. But the reality is that what I see happening is that the leadership in the region is coming to terms with the fact that this is really a hindrance, and are taking concrete steps to have these hurdles removed one by one. And I think that it's now not so much a question of not knowing, it's implementation and how indeed this is, whether you're talking about processes and procedures or you're talking about infrastructure development, any of these things which are necessary to see both goods and services move and flow easily. So I think perception is based on that lack of good information. Right. And what we need to do is to make sure that that good information is out there for decision making to take place in a way that it happens in other parts of the world.
Very good. In terms of moving on to the next topic, before I do that, I think there seems to be unanimity in terms of, yes, there is still a perception gap, but it's narrowing down. Information technology is empowering both investors and others to acquire reliable information to make decisions. And I'll move on to the next question, but I just want to capsulize this perception thing. I'm based in Ethiopia. I'm originally from Ethiopia. And last Saturday, if you Googled Africa or anything like that, one of the most trending things on Google was the Boeing 787 Dreamliner. All the headlines said, an African carrier is the first to fly the Dreamliner. It happens to be Ethiopian Airlines, a client of mine. But that's also the kind of information, the kind of thing that minimizes the gap. An African carrier flying the most advanced aircraft made in the United States before even United Airlines does. That, I think, is a powerful story that we all Africans have. But let me move on. I mean, my clock here is kind of warning me. We're running a bit short. But I move on and I start from you and I come back here, maybe with the Secretary General here. But I'll start with you, Patricia, which is, from your perspective, what are the sectors that will drive growth very quickly in Africa?
Sorry,
the sectors that will
sectors.
drive growth in Africa.
Well, clearly the area of greatest deficit is the services industries. And I think that the services sector will actually allow for your goods sectors to actually become much more efficient and much more effective. So here's where I think there is a gap, where I think there is huge opportunity. Clearly, the whole business of logistics is one where there is necessity. But if one looks at the extractive industries, of course, how do we move those to greater levels of value addition? Here is where we talked about earlier on the deficit of energy. How do we bring the energy picture together with the productive sector and actually then be able to do value addition? So I think this is very important. You look at East Africa, of course, agriculture is huge, and the opportunity for East Africa to be the breadbasket of the Middle East, and maybe even looking further afield into India and beyond. I think that this is certainly something which is not beyond the reach. If you look, for example, at Ethiopia and what they've managed to do, and places like Kenya that they've managed to do in terms of growing flowers, this is commercial agriculture. They have been able to exponentially grow that industry because they've been able to apply technology, use modern technology, et cetera, et cetera. So with the assets that you have in terms of land, in terms of water, a country like Zambia, for instance, they're only using maybe 20–25% of their arable land. This is just an opportunity waiting to take off. And I think agriculture has got to be one of the things that becomes very, very important going forward in terms of looking at the opportunities globally to feed the world. And Africa must be part of that solution.
Very good. Cindy, so same question to you. From your perspective, what would be some of the drivers? I know Patricia said agriculture, which we all know, infrastructure investment, but what would be some of the additional sectors that you think will be the growth drivers for Africa? Very quickly.
The financial services sector is very key. We have seen what has happened not only within the regions, but also between the regions. If, for example, you look at the COMESA and ECOWAS region, you will find that because of the existence of EcoBank, United Bank, etc., our trade between COMESA and the ECOWAS region has increased from 110 million in 2007 to approximately 1 billion as I speak. Right. And that has been mediated by the financial services. But apart from that, when you deepen the financial services, the capital markets, then you are also able now to innovate when it comes to mobilizing funding for infrastructure and other activities. Because what is happening now is that quite a good number of the money that we have is put outside, earning at the current rates of 0.25%. And then we go there and borrow for development. And this is why we are pushing for a regional infrastructure bond. We have an infrastructure fund, and we're working with the Dubai Financial Services Center and others to make it a reality. So that, to me, is critical. The second one is the SMEs in terms of value addition, because what we need to look at is how, for example, just to give you a typical example, if you look at Turkey, Turkey has got a livestock population of 40 million, right? That is cattle, goats, etc. Kenya has the same. Right. But Turkey has 3,000 tanneries, Kenya has only 5. And when you look at the GDP contribution by that sector in terms of value addition in Turkey, it accounts for 15% of the GDP, more than 20 billion. And yet in our region, it is less. So we need to look at these areas and innovate. The last one, of course, I want to mention is innovation. Because if you want to see where innovation is taking place, it is taking place in the region. And this is why IBM set up its research lab in Kenya last year. And when I asked them why, they'll be very clear to say that we have innovation. But apart from that, we don't also have the regulatory barriers that you have in the mature markets like the United States. You can use a mobile phone in order to make a prescription, to send results, or the person will sick. But if you want to do it in America, you'll have to license that medical device. So because of these elements, we can then leapfrog in using technology in order for us to unleash the potential for Africa.
Very good.
Thank you.
So financial services, innovation. Jean-Louis, you're a banker. You do trade financing. Very quickly, what are the sectors that you see growing, especially from the trade financing side that you see every day?
Actually, I would have said that is the easiest question because virtually all sectors are really profitable sectors.
Right.
But I would like to emphasize on a particular sector, which is energy, electricity. We do need investment in electricity. And this time around, we shouldn't miss it. When you look at the example of Dubai, Dubai started building infrastructure, and then investment follows. We should do the same thing in Africa, because every time we talk about building a road, and I'll take a very simple example, the road between Abidjan and Korogo, which is in the north of Cote d'Ivoire. People were saying in the past, it's a road to the middle of nowhere. But virtually 80% of the trade of Mali today is on that road that was built. So we need to build infrastructure, roads, electricity, because there won't be any transformation of our agriculture, of our economies without proper electricity. How do you build a factory if you don't have electricity? And Africa has everything you want. Everything you can imagine, you can find it in our continent. I was just recently flying over Congo and Gabon. You only see forests, green. So green pastures. How can you transform those green pastures in a basket of the world? You will need electricity to do that. You need fertilizers. And you have, with all those discoveries that were made, gas on all the eastern coast of Africa, on the west coast, oil. You can have all the fertilizers you want in the continent.
Justin, this is going to be difficult for you because Jean-Louis said every sector. So
Very simple for me.
It was a catch-all. So
for me, the story of Africa, Jean-Louis said earlier on, has been basically, principally, the story of commodities. Okay, so in real terms, when you look at what commodities are we talking about, we from our investment banking perspective, have a very simple way of analyzing it. We just talk about the meat, which is mining, agriculture, mining, energy, agriculture, and transportation, telecoms. So when you're looking at the mining, I mean, it's basically fueled most of the Chinese interests that people are talking about over the last 10, 15 years. You look at the agriculture and what's happening, especially from the Middle East in terms of some of this nascent land that we're talking about that's not being utilized fully. You look at, the energy sector. Again, there are three key sectors within that. There's power, clean energy, hydroelectric power, immense opportunities in there. Clean energy alternatively. Then, of course, what's happening in Mozambique and Tanzania with, the gas, and what's happening, obviously, on the West Coast with the oil.
Very good. As an investment banker, you were smart enough to kind of prioritize for me and then for the audience. But I move on to Charles. Do you think telecom is still an attractive sector? As I said, recently I was in discussion with the CEO of one of the biggest telcos in the world. And in the discussion, he said, well, the only big unopened market left in the world, not in Africa, is Ethiopia with 94 million people. So excluding Ethiopia, is telecom still attractive? Because MTN is everywhere, Etisalat is in many places in Africa. I mean, all the telcos are everywhere in Africa. In most African countries, you have 3, 4 mobile operator, in some cases more. is it still the cash cow it was? And very quickly, in your opinion.
Well, you have to segment telecoms. The telecoms you're talking about is the telecoms, voice telecoms, talking telecoms.
Right.
We now have banking telecoms. We have value-added services telecoms. Today, in Uganda, we've got what we call mobile money, transacting money on the mobile telephone. In 2 years, we have managed to accumulate more accounts than all banks have accumulated in the last 50 years in Uganda.
Right.
So there are very many other value-added services coming on the mobile telephony, voting, all kinds of data streaming, all that is coming up. So I think there is a lot more coming from the telecoms, especially that the informal sector in these economies is growing, is beginning to understand, is beginning to engage and understand, and therefore trade much more.
Fantastic. Listen, I think we've covered all the bases in the very short period of time that we were given. We've discussed the sectors that are driving, the ones that are attractive. By all accounts, every sector is attractive, so that means you have to select the countries and the sectors you want to be, especially for investors from here, from the UAE, and from the Middle East going into Africa. We've talked about the perception gap, and the consensus, at least from my perspective, I'm sure you would agree with me, is that it is starting to narrow, still not there. And I'll leave you with this. We did a survey recently of 500 global investors. We asked them, comparing investment opportunities in Africa, Africa as being an attractive destination compared to the rest of the world, we asked them rank it, and out of the 500, 300 already done business investing in Africa, 200 have not. The 300 who are already doing business in Africa overwhelmingly were positive about Africa and ranked Africa higher than any other region in the world except emerging Asia. The 200 who've never set foot in Africa, probably learned about Africa from the media and all that, had just the opposite impression. They were overwhelmingly negative about Africa. So the easy thing is use the 300 as brand ambassadors for Africa. So that, I think, that would be addressing. But the sectors, we all agree, there's a lot in Africa, a lot to be done, a lot of opportunities for everybody in this room and beyond. If you want to know more about Africa, there are experts on this panel, and I'm sure in the audience over the next 2 days will address these issues. But unmistakably, what we say, it's time for Africa is real, and those of you who are in the audience, I'm sure will agree with me, we need to go and do business and invest in Africa. Before I wrap up, I have some housekeeping I was told I need to tell you. You'll thank me for this. There's a fantastic lunch right after this. So you'll head out of this room, it's somewhere in the back, have lunch. You need to be back here by 2:15 on the dot. We have VIPs coming in, so we don't want to delay. But overall, what I want you to do is give my panel a very warm round of applause for the insight that they gave us. Thank you very much. We'll see you at 2:15.